Welcome back, everybody. Sive Morten is here with the ForexPeaceArmy.com. Let's take a look again on the Forex markets. So, starting from the euro, also we'll take a brief look on the Great British Pound, but euro is our primary object, as usual. So, yesterday we said that by the external driving factors, sentiment on the market start changing, just because of the recent statement on the Donald Trump on their once again helicopter money of the 2000 per capita in the United States. Later Besson said that might be just tax deduction. But anyway, this suggests some additional liquidity on the market. Most important was the second statement concerning the shutdown. Voting is yet to be done, but currently market really hopes that shutdown will be over and a big spending by the United States Treasury starts. That tactically could actually make dollar weaker in the nearest time. So it will not make big impact on the valuation, but since it will be really big inflow on the liquidity on the market, that could trigger some sell-off. Also, investors will start closing positions that they have taken as a safe haven, worrying for this long-lasting shutdown, some other issues, liquidity issues that have happened previously in the United States. So all this stuff will be unwound, and that should actually decrease demand for the dollar. But since all this stuff is not promised yet, Donald Trump, so if he said that it will be very soon, it doesn't mean that really will be. So from that standpoint of view, investors, as you can see, really making really careful steps, gentle steps in the direction. But as we recognized on the intraday charts yesterday, that sentiment is really is changing, and we even discussed some bullish patterns. Returning back to the picture on the daily chart, well, this grabber nominally it is still valid. By the Chad Napoli tools, grabber is becoming invalid when the market closes above it. But for me, by my experience, personally, I'm not trying to rely on the grabbers that already has been spiked up when its invalidation point was exceeded. Yes, maybe it will work, but for me, it is a very weak pattern right now. Usually grabbers work really fast and very strict to the rules. When you see this kind of the fluctuation market, some flirting to the upside, this moving slightly above the pattern top, well, this pattern is becoming for me under question. So I'm usually not using it for position taking if I do not see some confirmation of the bearish sentiment on lower time frames. But for now, actually, I do not see it. So on the 4 time frame chart, yesterday we said take a look at the rectangle, triangle. Door is open for both ways, but we have bullish grabber here, and this sign of the bullish dynamic pressure because market stands flat and trend stands on bearish side. That suggests that investors are building some energy, bulls are building some energy, and it should be released. That has happened. So we have the first upward action. Upward action stands relatively fast. So I wouldn't say that this resistance areas already has been broken, because market actually stands somewhere inside of it, although it's relatively wide. But at the same time, what is a really good thing, if you take a look at the bigger picture, you can see that market returns back in an area of this previous consolidation. So that was lows, it was broken down. Now market will return right back up in this area. Yes, major tendency here with this downside action. It's still under question. That's actually, by the way, the reason, one of the reasons why market stands here, right? So it's also some resistance line at this area. In fact, we have here some kind of the downside channel. But it's moving relatively good with some acceleration to the upside, and here's context remains bullish, and we will see what will happen. In the current situation, what from the bullish point of view, what we do not want to see, and that really helps us to create the plan. On the hourly chart, here's how situation, everything has happened actually. So market has formed the butterfly, has reached predefined target that we discussed yesterday, 116.04. Next stands 116.20. Now it stands a downside retracement on the target. We do not want to see the drop below this area. It's below an area between the 1530 and the lows of the butterfly, which is around 1540. So we treat this area as a vital for short-term bullish context. If market drop out, it also means that will drop out and below these lows once again. So it will be downside breakout here, which makes us think that market is still moving inside of the channel, right? So we here would like to see the signs of the possible upward breakout. And from that standpoint of view, just to not take too much risk with this setup, maybe it makes sense to wait for some compounding ABCD retracement down, because in this case it agrees with the support area 1553, 1558 conference support. And what is more interesting for us is that actually in this case market will be very close to invalidation points. So if even we would like to take position on a conference support, risk will be very small. So approximately around 25 pips, not more. So this is a good thing. Besides, existence of the conference support led us to move stops to the break even, and when the market will start to respond to this level, so this is relatively strong level, and it's really high chances that we will get at least some technical bounce and technical respect outward, if even later market will continue downside action. So that led us to protect position with the break-even stop. So this trading plan gives a relatively low risk with good chances to take part in trade if we will get upward continuation. Because currently I do not see something else that we could actually consider. Nearest upside target will be, as I said, 1620. That will be, as you can see, next butterfly target. And that will be a nearest extension of this ABCD pattern. So this will be COP, 618 extension of this ABCD pattern. That's probably all for now. So what I see, yes, by the way, it's a Great British Pound that I said take a brief look. Here actually it stands mostly in the same thing. That's our pattern. Market stands somewhere around the bottoms of the hand shoulders. Here we do not have as clear patterns on the euro currency, but in general you could recognize the consolidation of potential right arm. So if you will use here some fib levels for protection, maybe you using 618 support, for example, just to avoid the clear, evident signs of the failure, right? So if market will start dropping lower, breaking through the 618 support, which will be somewhere around 137 approximately, you will see it. That will be evidently that something is wrong with the hand shoulders. Until market stands around it and forming the shoulder, it keeps chance on a possible upward action, because on the British Pound the same drivers as on the euro currency. Now it totally relates to the United States dollar, and on the gold market as well, by the way. Now we just need to get only one thing, that Donald Trump really said the truth. It really will happen. This is the only risk factor currently exists. So let's see what will happen. But in general, overall picture here looks not bad, and actually relatively clear patterns, clearer setup, and why we shouldn't actually use it. That's all for now. See you tomorrow.